Unit finishes are so-so, it just doesn't hit the mark. You are going to have a really hard time selling it at this really, really high number that you're aspiring to.
They are seeing rental numbers that are very much the same, but the profitability is much, much less. And remember, luxury condominiums never really gave a return more of a 3-4% in a great day, and this 3-4% is basically eaten up by this HOA.
Don't think things are going to get better. They can get worse before they get better, and you have to come in line if you're going to sell your product.
After all their uncertainties, people are starting actually pulling the trigger. Those don't show as closed sales yet, but do show as pending sales.
Would this be fair to say that this is happening because sellers have been unrealistically pricing their product, or they were pricing like last year and everyone's pulled back?
Half of the expired listings are well above $3,500 per square foot.
The buyers have a lot more optionality. They have a lot more product to choose from. And as a result of that, they're shopping around, and they'll keep shopping around, and they will look for a deal. And that's what's happening. Welcome to the State of the Market mid-year report for the David Siddons Group. My name is David Siddons. This is Stefania Cambarau. She's our territory manager for Miami Beach. Steph, thanks for coming in today. I see you've got your notes. If you are trying to get good optics of what's going on the market, we have my general real estate report, which covers the whole market. This is a granular look at the Miami Beach market. This is your territory. You analyze it. You eat, sleep, and breathe it every single day.
That is correct.
We are going to go into the market, what's happening, not just what's happening, but why it's happening. This will not be like any other real estate report that you will typically see. We're going to look at buyers, sellers, and investors. Without further ado, let's just jump into the market. Miami Beach market. What's been happening this year? What's going on?
So as you know, we like stating different, the market doesn't do the same in the old Miami Beach and Bar Harbor and Surfside. The market does very differently according to the segments. So we have, of course, price points and as well as age of the buildings, which we always like stating in our reports. So we have the different segments like $1 to $3 million, 3 to 6, 6 to 10, 10 and over. We see different performances.
Okay. So jumping into the 1 to 3 range, how many sales, looking at the number of sales that we had happen in the first half of this year so far, we've seen what I've got on record, close to about 200 sales for the first half of this year.
And that's actually above what we saw in 2024.
Okay, so from the year ago?
Exactly. So for who's thinking of this is a slow market, the sales are happening. In the $2 to $3 million, those sales are actually happening. And we actually see over 10% increase in the average price per square foot.
Interesting. So this is the entry level into the market. And this 1 to 3, we've seen a little bit of an uptick from last year.
Correct.
Still a good number of sales. So for sellers out there, it's good. For buyers out there, what's the product that seems to be the focus of attention? What are the buildings? Because this is a very granular conversation. Yes. What are the buildings that are selling in that 1 to 3 that people seem to be focused on?
Of course, David, there's very much of an awareness of the fact that the older buildings are going to be problematic in the price range. There's other older buildings that are still not brand new, but they're very well managed. So the ones that have already gone through all the remodeling are very well managed, but probably are as old as the other ones are still doing great. For example, one of the great condos that trade in that price point, in my opinion, in South of 5th is Portofino Tower, 300 South Point.
Is that trading in the 1 to 3?
Yes, you can definitely find a very nice 2-bedroom in the $3 million. And that's one of those buildings that it's in the prime location, has already gone through all the remodeling. However, the price per square foot is still based on the latest comparables, which was during the 3 or 4 years remodeling, which has been very painful for the owners. But that's where the opportunity is.
And where dollar per square foot are you picking up those units?
Over there, even if it's in South of 5th, where the average is higher, you can trade at the $1,500 per square foot, a very nice 2 to 3 bedroom.
Interesting. So when your neighbors, if you're in Continuum or buildings like that, where you're trading over $3,000 a square foot, double what you can get in for 50% of that dollar per square foot price in Portofino. I also noticed in the other 1 to 3 range, as you move further up the beach, and this is just an observation I had as we were looking at this data together, that buildings like the W and Setai, we still see the ability to buy a 2-bedroom unit in those buildings. Of course, it's not a big unit. You're talking, what, 1,100, 1,200 square feet.
Correct.
But certainly, worthy of attention.
Absolutely. That's a great resort living on the beach for that price point. I agree with you.
So we're going to move into the next price point, but I want everyone to keep in mind as well the conversation that as we've talked about buyers and sellers, but also renters, the rental market, which we'll kind of go into.
Yes.
And I know that the rental market does get factored into the 1 to 3 range. Anything that's really being renting for about, I guess, $10,000 to $20,000 a month is going to fit into that price point.
Yes, that's about it. If we start considering rentals above $7,000 per month, that's the price range that we're talking about, 1 to 3. Exactly.
Beautiful. So let's move into the next bracket, the 3 to 6. What's going on with that market? What are we looking at?
So in that market, we see a higher increase in the closed sales. So transactions are up 20% in this price point. So again, a dynamic market. What we do see, the price point, the price per square foot is down.
Okay.
So more trades, more closed transaction, average price per square foot down 11%.
Are we seeing more inventory? What is the inventory situation with that?
That is actually the price point that does have a pretty steady inventory compared to what comes to the 6 million up.
Okay, so what does this mean out to buyers out there in the market? We might assume that with more buyers in this market, Steph, that you've got more inventory available, you've got more choices.
So inventory in general, we are in the old Miami Beach in the 16, 15, 17 months of inventory. So it's not a low month of inventory. It's a market where there is enough inventory because, of course, you have a long list of older buildings that are not trading as well as the one that we're describing.
Yes.
So inventory is in the 15 to 17 months, same as the previous segment. However, more closed sales in the segment and more of a discounted price per square foot.
Okay. And the buildings in the 3 to 6 range that you're aware of that seem to be what I would say buyers pay attention to these buildings, what are the buildings that we seem to like in that 3 to 6 range?
There are buildings where actually we had very, very nice transaction representing buyers, representing sellers. Bath Club is great condominium. As I said, not necessarily brand new because these are pre-2010 building.
Yes.
But these specific condominiums are very well managed, offer a level of service that is well above the average. Do not have the hotel component. However, it's something at a very high standard, and we see the sales within the $6 million in there.
So we had obviously, I know we had an experience, we had a sale at the Palace, which was $1,270 a square foot. That came in that price point, just under $4 million. There was a lot of unit with an incredible view, which had been remodeled, partially remodeled.
And that's a great price point for
phenomenal price point for that. And then obviously we sold a unit at the Bath Club that was a fully finished custom unit that traded out at $1,580 a square foot.
Excellent for to be on the beach, direct access to the beach, direct views of the beach, and truly custom, just like you said.
These units had great water views. And if we look, so when we look at Portofino Tower, when we look at Majestic, when we look at the Palace in that 3 to 6 range, that's some of the finest product out there that we've seen transact at that level. And it's not surprising when you're able to get all of this product under $1,500 a square foot.
Correct. And not having surprises as you go, because that's the very, very important thing that buyers nowadays are looking at. Where is the building where I can only have good surprises?
Yes.
Not bad ones.
Now, rising HOA fees obviously have been a big part of the conversation. Yes. And the rising HOA fees are something that as we get into this 3 to 6 range, there's a lot of older buildings around that are going to just have much heavier carrying costs. What are we seeing out there in the market right now? And what do we need to stay away from?
So I can tell you that the rising of the HOAs by, I would say, an average of 20% it's the norm. It's been the norm for 2025. So in the last year, we've seen this across the board. Remember, this increase comes after a previous increase. So owners, and now I want to talk to investors, owners who have had their properties rented in a condominium that had an increase of the 20% in the past 3 years, another increase of 20% in the last year and a half or so, it's probably going to see a further increase in the next year. They are seeing rental numbers that are very much the same, but the profitability is much, much less. And remember, luxury condominiums never really gave a return more of a 3-4% in a great day. And this 3-4% is basically eaten up by this HOA. So if you're an investor and you have a product that you're still renting at the same rates, nothing more, and your HOAs have gone up to 40% in many cases.
So the expectation is if you are in that price point and you have a product that's being rented out right now, don't think things are going to get better. They can get worse before they get better, and you have to come in line if you're going to sell your product. Okay, so this is where the conversation really gets interesting, folks. We're going to move into the 6 to 10 range and then the 10 above. This is where we see the biggest shifts and changes, and this is where you guys really need to tune in and pay attention. Whether you're a buyer, seller, investor, 6 to 10. Steph, what's been going on in that market? Tell us about the condo market in the 6 to 10 million range across Miami Beach, Bal Harbour, and Surfside, please.
Okay, so what we saw in the other sector, which was an increase in the closed sales, we certainly don't see that happening in the 6 to 10 million dollars. We actually see almost a 20% decrease in closed sales. And when we look at expired, which is a very good indicator, expired listings, so properties that have been up for sale, never sold, that's a 30% increase in expired listings this year compared to last year.
30% up from last year. So this, would it be fair to say, again, this is now the what's happening now, why it's happening, would this be fair to say that this is happening because sellers have been unrealistically pricing their product, or they were pricing last year and everyone's pulled back?
You're so smart, David. This is exactly what is happening. The average closed sales are at $3,500 per square foot. Guess what? Half of the expired listings are well above $3,500 per square foot.
Wow.
So really? That's the average of what the properties are worth, really. Resale, it's in an average $3,500 per square foot. Of course, if you have a specific penthouse, custom made, the number is going to be higher. But that's not the case with expired listings. Those expired listings are average product that is listed $5,000 per square foot.
Is this the 6 to 10 range? This is the 6 to 10 range. Yes. Okay, and this isn't even the 10 plus range. The 10 plus range, where you might typically see this $3,500 a square foot number, because this is when you start to get into that kind of level of the market. So that market has been slow. Significant amounts of increase of inventory. The sales have come down, they've dropped down. Why? Because sellers have not been in line with the buyer's market. They have not adjusted themselves according to what the buyers are willing to pay. If you're a seller and you are scratching your head and you're wondering, why didn't my condo sell in the last 6 months? I've had it on the market, I haven't been successful. Well, hopefully this will give you a really good optic into that. Simply put, the buyers have a lot more optionality. They have a lot more product to choose from. And as a result of that, they're shopping around, and they'll keep shopping around, and they will look for a deal. And that's what's happening. There's been a few buildings this year, honestly, that have surprised me, that I've looked at and said, our personal experience, wow, these have not had a good year. There's a few buildings that we saw up in Bal Harbour, notably Oceana, St. Regis, have not had a very good run in the last 6 months. What are the buildings that seem to actually be moving and doing well? What's the product that's actually selling, and why?
Probably the number one selling in that price range is Continuum in South Beach. And again, we were talking about another building that is not a brand new building. It's a building from the early 2000s and is performing great. The numbers per square foot are going up, and this is in the 6 to 10 million as well as the 10 million up. And again, it's another product that offers incredible level of service, not replicable, and without the hotel component. Again, in this case, just like we said it for Bath Club.
The only buildings that seem to be really surviving this onslaught of rising inventory are the buildings that are always in our top lists, our top 10. And there's a reason why we systematically do, and we've just done it now. What are the best 5 performing resale condos in Miami, on Miami Beach, in 2025? And they all have the same elements, which are resort level service at scale, unique locations, primary inhabitants.
And I know you have a favorite in there.
And I do have a favorite, yes. But I'm not going to tell everyone because you can watch our other video for that. So keep on watching the videos. Understanding in the 6 to 10 million range, that fact that we have an excess of inventory, we've got a lot more optionality, buyers are being more cautious, sellers are being clearly overreaching and asking dollar per square foot that do not match the sales numbers. They're asking higher dollar per square foot than what the records are even allowing us to register. There's another game and there's another system at play here that you as a seller or a buyer need to be absolutely aware of. What is the product that is drawing so much attention?
That's pre-construction. It's a desirable product. It's a product that you can have brand new and you can pay in installments. And that's a great product. Out there, we have several pending sales, but those are actual sales that are happening soon in Paragon, in the Ritz-Carlton, in Miami Beach, and then Five Park, even if it's not on the sand, that's still doing very, very well and selling the last units from the developer. So that's an incredible draw of buyers, which came straight for new construction.
And we have our new condo construction website, which we can flash up, where you can actually go and see every single building that exists across Miami Beach. In that 6 to 10, you're absolutely right. Paragon, Ritz-Carlton, there's Five Park, and obviously there's Ocean Terrace, which is a new building, which comes just a shave under that $10 million mark. Then obviously as you go above that, you introduce Rivage, and obviously then you've got Demax new project, Ocean House. There's the Four Seasons, which keeps expanding. This building keeps going. It's just expanding out, taking over so much of Miami Beach. This market is drawing those buyers. I can reflect on the mainland to contribute to obviously your knowledge, your clear understanding of the beach. If I was to reflect systematically on the buyer behavior, new condo construction project is honestly very, very popular because it is a long-term play. The buyers are paying in portions. They're not paying all at once. They're drawing it out. And they know that this is a long-term view, which is less impacted by interest rates. Because by the time you come to close on these units, it's several years from now, and expectations are interest rates can and will likely be very different. So be aware. I think the takeaway with that is that you've got to know that your competition out there comes very, very strong from new construction projects. And as a buyer, the optionality in new construction is great.
Huge. And for the beaches, remember, there's Bay Harbor Island, lots of new construction, Bay Harbor Island, great product, and North Bay Village. Again, an area that didn't exist and now is offering excellent product with Pagani, Continuum, the Ritz coming up. So again,
there's a lot of product.
Choices.
It's not all about $10 million plus condos on Miami Beach. There's plenty of optionality at those lower price points for people who want to be close enough to the beach to go to the beach for the day and still be in a, what I call a Class A building. Let's move up now to the $10 million plus range, a range and a price point that we play at all day long.
The big boy.
The big boy players. Okay, so this market, there's fewer sales. We obviously understand that typically every year there's less than 20 sales that we usually see out in our markets. What is the situation right now for that $10 million plus range? Because, I know that the numbers should reveal some interesting behaviors.
Yes.
What's the story?
So when you start looking at the volume, so actual closed sales, actual transactions, it's about the same, about 5-6 transactions in 2024. First half of the year, same number of transactions in 2025.
Okay.
However, when you look at pending sales, there's an increase of 70%.
Wow.
And that says something about this last month in the year. So after the elections and after all their uncertainties, people are starting actually pulling the trigger. Those don't show as closed sales yet, but do show as pending sales. And we know that those are happening soon. So if we have a certain numbers recorded for the first half of the year, we know we're going to have a very different one for the second half of the year.
There's also a very high number of what we call the shadow sales that we're not aware of. Coming back to that new condo construction, so much of our luxury condo product is in these new buildings that typically we haven't seen before. DeMac, for example, their units are starting at what, $15-16 million?
This is the Delmore project, yes.
Yeah. So Delmore, right there, just next to 87 Park, it's coming in at that price point. Rivage is coming in, well, it's over $10 million, yes? So you mentioned actually before, as we were going off camera, 68% of sales in new construction on the $10 million plus range.
Yes.
So that clear exactly what that is. Just like explain that for a second to the audience.
So no wonder when we look at expired listings, there's an 80% increase in expired 80%
80?
increase in
80.
expired listing above $10 million.
What does that mean? What does it mean to see 80% increase of expired listings in $10 million plus?
Probably a lot of 10 million up units for sale are not worth 10 million up. And the buyers are choosing new construction instead.
Okay, I'm going to give you a little bit of experience now from my point of view. We've obviously been through the numbers, and now we're actually going to go into why is this happening? And we'll tell you our own personal experiences. I personally am constantly looking for clients who are looking for luxury condos, 10 million, between 10 and $30 million typically. That's a typical kind of price point. The issue that I have is that a lot of the product that's being listed out there is just simply unrealistically priced, unless it is exceptionally well done. And what I mean by that is it's finished well, right? If I'm in an older building or it's not a new building and the unit finishes are so-so, it just doesn't hit the mark. The top buildings, our top 5 buildings, the number one building that really is capturing these sales over $10 million and doing it well, out of the top 5, 3 of those top 5 sales, dollar per square foot, happened at the Four Seasons at $5,200 a square foot. Next, we have an incredible sale at 87 Park, again, an incredible building. That is a testament to that unit particularly, and there's another unit that may follow. Call me for more information, which again, very high level finished unit. These extra large primary residence in the sky, really well done, they will sell. But if it's not well done, if it isn't significant enough, large enough with the great water views and everything in the right building, correct. I don't know about you, Steph, but I've seen a lot of penthouses in what I call B-level buildings asking over $20-30 million, and no one's buying them.
And you're the first one to discard them when you're taking your buyers.
I'll tell you right now, I don't care how beautiful your unit is. If you're in an older building that isn't in our top 10 buildings in Miami list or on the beach top 10, you are going to have a really hard time selling it at this really, really high number that you're aspiring to. People just don't want it. They're going to go for a new condo construction project, or they will shop around. And I think this is the key takeaway that I see in this market. It's important to recognize. So when this product is not selling, this $10 million plus product that is not in a Class A building, what are the owners now doing? What are you seeing?
I see as the seasonality is over, for example, for the beaches, I see a lot of owners bringing this to the rental market. They bring their unit to the rental market. However, this is not going to cover their cost. So it's probably much better being realistic, adjusting their listing price it correctly, because the price correct product is actually trading, as we can see. The sales are there, the transactions are there, and the buyers are out there.
Beautiful. Steph, thank you for doing this. I think the conclusive takeaway from this is sellers need to price according to the market. They need to look at the dollar per square foot. Again, our report will reveal all the dollar per square foot across the market. Make sure that you're working yourself within the best buildings in Miami according to our rankings, which are calculated effectively and accordingly, using the softwares that we use to know long-term performance of good, high-quality product buildings. There are buildings out there that we don't like, that we want you to stay away from. And as long as you do that, you're going to be okay. The end result is that the market that's really having the hardest time right now, much like most markets across Miami, is the $6 to $10 million range. And the $10 million plus, where we have a good number of very high-level buyers coming in from around the world, is still performing well. But a lot of those buyers are focusing on new condo construction, and it makes sense that they are doing exactly that. Steph, thank you for doing this. We will keep updating our reports and analysis as we go through the year. If you want more information about the beach market, if you're a buyer, a seller, or investor, please call Stefania Cambarau. She is our expert on the ground. If you would like a granular analysis of your unit that you own in Miami, that you're thinking of selling, please see our information below. Give us a call. We will happily come to you, to your apartment, look at it, independently analyze you, and give you quantifiable data and accurate estimations of what your unit is worth and how long it will take to sell. Thank you for watching.
Thank you, David.
Thank you. And please tune into our other videos covering all our other markets in Miami for our mid-year report.